Hello and thanks for joining me. It is October the 20th. After the close, you're looking at a chart of the ES, the December contract. And what I thought I would start with is an explanation of the ruler that I use, basically to find half back, but that's the best thing to call it, is a ruler. And I don't use Fibonacci numbers. What I did is I went in and edited the Fibonacci tool. So in this case, I pulled it from the most recent swing high to the swing low. And that's basically the range that we've been trading in over the last 10 days. And I use 2, 3, 5 for my levels. In other words, starting here at 0, I pulled down just so that these numbers will be positive. That's what makes sense for me. But if you start at the bottom, you go up 2, which is 20%. Then you go up another 3, and that gives you the halfback level. That's what's important to ICT's technical analysis. Then you go up 3, that gives you 80%. And then the extent of the move is up another 2. So that's the 100% of the range of this move. So something that I've been trying in order to make sense out of whether we're trading in a discount or at a premium is to hold the longer term range. And that gives me a better idea of where we're trading at. So you can see the high was formed, and then we went down to the low, and that was the CPI print. I think this first big down move here, that was some Powell speak, some Fed talk, brought the markets down. We traded down into the CPI print. That was a week ago Thursday. And of course, we had the huge rally back. And this rally took out about 3 days worth of highs. So you can see it took out Wednesday's high, it took out Tuesday's high, and it took out Monday's high. What I was going off of there is looking at this point, we have started to trade into a premium. The next logical place to go for liquidity is to this next swing high that happened on Friday, the day of the Powell speak. That liquidity was taken this week. Price traded up above that prior high. And what happened overnight on Wednesday was the CPI print for the UK. So that was a negative catalyst. We had liquidity being taken. We had a negative catalyst that brought price down to this level that I have marked as a fair value gap. I'm on the 65-minute time frame, and there's reasons that I use that time frame. I can talk about that in another video. So we have the gap, the fair value gap, that kind of spans either side of half back, and then down below that we have a huge gap that formed during that retracement after the US CPI print about a week ago. So what I've tried to do here is just give you some information so that you know what you're looking at. You can understand the chart a little bit better, understand why I've drawn the levels in where they appear. And I took 2 trades based off this chart. One was on Tuesday, and the last candle that's drawn here is right around 8 o'clock Thursday morning, and that's October the 20th. And I took a trade there as well. So in the next video, I will go over those trades. Thank you so much for your time and attention, and I'll see you in the next video.